Friday, October 23rd, 2020, Maneco 64, home of alternative economics and contrarian views. So I just finished watching the first 22 minutes of the presidential debate. They looked very civilized, I have to say, very calm. That's good. But they all seem to be on the same agenda, so to speak. The main enemy, of course, is the virus. One of them, President Trump, is more light on the regulations on opening up the economy. The other one, Vice President Biden, is more draconian. So they're all going right along with this crisis, I have to say. Maybe the president has different ideas if he wins. But to me, what really struck me, and maybe they talked about it later, I'm going to watch it all later on, the debate. They did talk maybe about the insurmountable amount of debt that's been created. That's going to destroy the currency of the country. That's going to make things even worse. Maybe they did, maybe they didn't. But I suspect they did not. And I think that's the real problem, not just in the United States, but in the UK as well, in Europe, in Japan. It's the debt. And why is that? Well, because it's the debt that backs our currency these days. It has been since 1971 under a fiat currency system. There's no anchor. And the more currency and debt they create, the less worth it's going to be. And as I've said many times, half of all transactions in one's lives requires currency. And if that currency is going to continue to lose value, people's livelihoods are going to be affected really badly. Yeah, of course, the top 10% who own most of the financial assets or real wealth will be okay. But the bottom 90% will be probably experiencing more what a third world country experiences, I think. And I think that's what people need to focus on. You might ask me, who would you vote for? Well, from watching those first 22 minutes, if I had to make a choice, it would be President Trump, mainly because he wants to open up the economy quicker than the other one. Even though I think he's going right along with this crisis. He's saying that he's going to use the military with the vaccines and that they'll do a great job in logistics. But last I looked, the companies that are the best at logistics are companies like UPS or Federal Express, not the United States Armed Forces, right? So that's what I got from the first 22 minutes of this debate. A lot of scaremongering. The second part of the debate is going to focus on Russia and Iran. More enemies. And I think personally, the biggest enemy is the debt. It's the central banks. It's inflation. And it's not going to stop. I think we've seen yesterday, for example, here in the UK, the Chancellor of the Exchequer, who is the equivalent of Steve Mnuchin, he's come out and continued to expand the programs. He's not calling it furlough anymore. Well, all that's going to mean is more taxation in the future, more inflation, as the country indebts itself even more. In the US, I expect more trillions to come out in terms of fiscal and monetary stimulus. And all that does is really destroy the economy. It might seem in the short term that it's a good rush of sugar for the economy, but the hangover is going to be horrible. These people need to come out of this Keynesian paradigm that believes that government and a few bureaucrats know what's best for the economy. And that includes President Trump as well, because he signed into law the huge package back in March or April. I don't remember exactly what month it was, the CARES Act. It was I think around 3 trillion, but in reality it was like 6 trillion, and it's going to continue. I think that's all you need to know in terms of safeguarding your wealth and your finances. Of course, there are millions of people that are like totally economically destroyed, homelessness, even people going hungry that I'm not covering here. And that's going to be even worse as well. So all I can say is that the wave of debt, or the tsunami of debt, is going to continue. And very few people, of course, the president and the vice president, they want to continue that because that's their job. That's what they're paid to do, or that's how they're controlled to keep the debt going. Yeah, some people believe that Donald Trump is here to administer the bankruptcy of the United States, but countries don't need to go bankrupt, especially the United States, because as Alan Greenspan said, we can just keep printing. But the way they go bankrupt is that their currency becomes worth less and less and less. You've probably seen that chart of the value of the dollar since 1913 when the Fed was created. It's lost like 97% of its value. But believe me, the last 3% might take a long time, but they're going to be very painful. And I think we are at that juncture. So there you go. I will finish watching the whole debate, but I would put some money down that they didn't talk about the debt and all the deficit and how much more dangerous I think that is in terms of fatalities than this current crisis. I mean, even the WHO said, not directly, but one of their officials said that roughly 10% of the world population has been infected, which is around 780 million. We've had just over 1 million deaths. So that's a 0.137 IFR, or infection fatality rate. And that's the infection fatality rate of a severe flu season. And that also corresponds to what Dr. Fauci said in a paper written, I think in March, in the New England Journal of Medicine. He said that he expected this virus to have a 0.1 IFR roughly. So there you go. With that, let's look at where the markets are. I'm a little later today. It's 10 a.m. London time. Yesterday was another frustrating day for the precious metals, but I won't stop saying it. Patience. Did you know that in the 1970s bull market, gold went up to almost $900? And of course, it started the decade of the 70s fixed at $35. So it made a huge move, but it was in November, December, and January of 1980. So November of 79, December of 79, and January of 1980, it moved from 400 to 887. So it made that big move in a few months. So that's why for people who are not trading precious metals, who are holding or thinking of holding precious metals, you just need to have some, in my opinion, gold and silver. Am I saying we're going to see the final blow off top that we saw in 1980 right now? No, I just think that precious metals can move very quickly. I think what we're seeing now is a consolidation. So there you go. Right now, gold is at $19.1050, up $6. I saw we got down to $18.94 yesterday. So that 1900 level is holding still. I think the September 28th low was just below 1850. So I think we are in a new uptrend here. The high overnight has been 1912.66. The low has been 1901.04. Silver is at 24.76, up 7 cents. Range has been 24.87 to 24.48. The Dow futures up 65, or 0.2% right now S&P future is up 0.2 as well at 34.62. NASDAQ 100 future is down a fraction. The currencies, British pound is at 130.84, unchanged. The euro is at 118.35, up 1/8%. The dollar is down 1/4% versus the yen at 104.62. And the dollar is also down 0.2% versus the Chinese yuan at 665.60. WTI crude is down 0.4% at 40.50. So crude still stuck around this 40-41 level. Copper. I wanted to touch upon copper because it's an important commodity. As it has been giving signs that it's starting maybe a new bull market ever since March. And recently we've made like the highest levels since May 2018. High-grade copper, I think we need to keep an eye on this. It looks very positive. Copper is very important in terms of having the commodity sector, the whole commodity sector, not just gold and silver, but all the other commodities move higher. So keep an eye on copper. It's looking pretty interesting. So to finish off, let's look at the 10-year yield. A couple of days ago, I said we're breaking out from an important resistance, which was 0.8%. Since then, it's kind of slowed down. But today, as I see here, or yesterday, it spiked even higher. We're now at almost 0.86. So I think this warrants keeping a close eye on. So yeah, we're unchanged from yesterday, but we're at higher levels than we were yesterday morning. I think we were at 0.82. So now we're at 0.86. Doesn't sound like much, 4 basis points, but in the bond markets, for the financial markets, is very important. And again, I think the volatility is more important here. If we start seeing big swings either way, watch out. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below. I wish you all a great Friday and a great coming weekend. Take care. Bye.